Hello everyone, welcome back to next episode of Mastering Commerce. Today we are going to learn the next chapter of accountancy. We have completed recording of transactions part 1 in the previous episodes of accountancy. Today we are going to start with recording of transactions part 2. I request you all to go through the details of journal first, then how we do the posting of entries from journal to ledger. After that comes the different books of accounts or different journals or different subsidiary books which are maintained, which are as follows. So once we do the journal entry, this is the process we follow. Journal entry, then the posting is done to ledgers. Now these are the books of accounts which help us to reach to our final accounts. Final accounts, you know, trading account, PL account and balance sheet. Those are generally the accounts which carry the balance with them, which is depicted by our basic books of accounts. Right? So now chapter 4 of your book, this is the accountancy book, chapter 4 of your book, recording of transactions part 2. It tells you about the special purpose books. Special purpose books means what their name specifies, we prepare those books. So special purpose books are the cash book, which we will be doing today. Then second we have purchase book. Then next we have purchase return book. After this we have sales book, sales return book, and then we have the journal proper. So these books we will be learning in this chapter. These books are basically, as their name tells us, they are specifically for the purpose what their name tells, right? So their name is telling us that cash book deals with all the cash transactions, purchase book deals with all the credit purchases, purchase return, again the name tells us wherever there is return of purchase items, the entries will go to purchase return book. Wherever sales is there, the entry will go to the sales book. Wherever sales return is there, the entries will go to sale return book. And journal proper, I will let you know what it is about. So these are the special purpose books which we maintain. So first we see the cash book. The cash book is categorized into two branches. Although there are three branches, but in your syllabus you have only two. One is the single column and the other is double column. Single column cash book is like the ledger of cash. You remember? Date, then we have particular, then we have ledger folio, then we have, over here we don't write particular, we write receipts over here. Then we have amount, then we have date again, then we have payment over here, then we have ledger folio, and here comes the amount. So this is our single column cash book which has only one column of amount in it. But double column cash book has two columns, in right hand side also and in left hand side also. One is the cash and one is the bank. So this is the major difference, that in single column cash book all the transactions related to cash are recorded in this amount column, but double column cash book has one bank column also. So whatever transactions are taking place through bank will be written in the bank column, whether it is receipt or payment. Format is just like ledger, right? So bank amounts are written in the bank column and cash amounts are written in the cash column. So first, on your page number 100 of your book, the first we are going to learn is single column cash book. As we proceed, I will let you know about the difference. Okay. So single column cash book, let us first draw the columns, the formats which we have with us. Date, then we have particular, in case of cash book we write receipt, then we have receipt, then we have again the journal folio, then we have amount, then we have date, then comes the payment, then comes again journal folio, and here comes the amount. So this is single column cash book question, illustration 1, which is given to you. Now please see, the first item is given to you of November 1, 2017. So let us write the year on both the sides of date. Now November 1 gives you cash in hand. Cash in hand means this is the balance which is coming forward from the previous year, right? So balance is always debit balance in the cash book. So balance brought down is how much? 30,000. Now after this, cash received from Gurmeet. Now over here, journal entry was the first step. We have to see cash received from Gurmeet means what will be the journal entry? Cash received from Gurmeet. So cash account debit to Gurmeet, right? So cash account is debited, so Gurmeet will come on the debit side. November 4. Gurmeet account. How much it is? 12,000. We can make this in our rough so that we are not getting confused, because you are directly doing in the cash book. Now journal entries are not done. So we can write in our rough. Insurance paid. Now you have paid the insurance. Insurance is your expense. Debit all expenses. Insurance premium account debit to cash. So insurance premium is my payment. So it will come in the payment side. What is the date? November 8. And how much is the amount? 6,000. Right? Now next we have purchased furniture. Again, amount, the entry for furniture purchases, furniture account debit to cash. So are you noticing all the entries where cash is debited or credited, we are checking that what item will come in the debit side or the credit side of the cash book. Cash book will record only the cash transactions, not the credit transactions. We ignore the credit transactions. So furniture is, date is November 13. Furniture. So furniture amount is 13800. Now next is sold goods for cash. Sold goods for cash means cash account debit. Debit what comes in? To sales. So over here we will be writing sales, and the date is November 16. For how much? 28,000. Now next is purchase goods from Mudit in cash. So entry will be purchase account debit to cash. Then purchase will come over here, and the date is November 17. Purchase for cash 17,400. Now next is purchase stationery. Again stationery is my expense, so it will come November 20. Stationery. So stationery amount is how much? 1,100. Now next is cash paid to Rukmani in full settlement of account. Now Rukmani's reference is given nowhere, so we will only do the entry of 12,500 cash paid. So November 24. Maybe Rukmani was my creditor and I have made the payment to my creditor. So Rukmani account. So Rukmani will be how much? 12,500. Now next is sold goods to Kamal for cash. So when we sell the goods for cash means I have got cash. Cash account debit to sales. So again this will come in sales. November 27 sales. And amount will be 18,200. Now paid monthly rent. So again rent is paid, rent account will be credited 2500. Now paid salary, same date, salary. It will, these all are other expenses, so they will come in the payment side, 3500. Next again deposited in bank. So bank account debit to cash it is, so bank account 8000. Now what we do? We see that this side balance is more, okay, and this side total is less. So whichever side has less total, we subtract that side from the total of the higher side, okay. So when we add all the debit items, we get the total of 88,200. Now whatever is the difference between these two sides will be written over here as November 30 balance carried down. That will be the balance of this side, and that balance will be 23,400. Okay, and in the next year this balance will be brought down as 23400. I hope it is clear to all of you. This is how the cash book is prepared. Our purpose is to make both the sides equal. So we see that whichever side is less, the items of that side total we will do and subtract from the bigger side's total. Whatever is the difference will be written over here, so they both will become equal, right? So this is the logic of finding the balance, because I have seen students struggling with finding the balance also. So finding the balance is quite simple, as in math you do when you want to do an equation equal. It's very simple logic. If you want to do them equal, what you will do? You will add 3 over here. So this 3 is your balance which you have added to make them equal. That same logic we are doing. We have to make debit and credit side equal. So to make them equal, whatever is the balance will be added to the shorter side, right? So this is how single column cash book is prepared. In the next video, we will be doing the unsolved question, the first question of cash book, so that you understand that how, because earlier what we were doing, we were passing the journal entries and then they were going to the ledger. But now we are not asked to pass the journal entries, but we have to directly prepare the cash book. So if you know what are journal entries, then you will be proficient enough in handling the cash book. So if till now you have not practiced journal entry or you don't know how to pass the journal entries, please practice it very carefully, because those are only going to help you to understand how the accounts are transferred to the receipt and payment side of the cash book. We will meet again in the next video. Please like, share and subscribe my channel. Thank you.